Hello, and welcome to the Semiconductor Industry Association's public webinar series, where we address current issues impacting the global semiconductor industry and market. My name is Falan Yunug, and I am the Director for Industry Statistics and Economic Policy at SIA, and I will be your host and moderator for today's webinar. 2020 proved to be one of the most unique years in recent times in terms of semiconductor market performance. Market forecasts released at the end of 2019 were quickly and fundamentally rethought at the start of 2020, as the COVID-19 panic basically upended the world. Significant uncertainty on how semiconductor sales would react to the pandemic existed for much of 2020, especially during the first half. As monthly world semiconductor trade statistics sales figures rolled in through the latter half of 2020, it became clear final year sales would end up better than most had initially feared. Here to help us make sense of the trends that shaped the semiconductor market in 2020 and look ahead to what the market has in store for 2021 are three distinguished panelists. Mr. Andrea Lati is the Vice President for Market Research at VLSI Research. Since joining VLSI in 2001, Andrea has focused on managing and developing forecasting models, as well as performing market analysis and research on the electronics, semiconductor, and equipment markets. In addition, Andrea has performed many custom studies for various clients and is the co-author of The Chip Insider. Welcome, Andrea. Mr. Dale Ford is Chief Analyst at the Electronic Components Industry Association, or ECIA. Previously, Dale managed the research teams at IHS, responsible for coverage of the electronics, semiconductor, and electronics components industries, and is one of the founders of iSupply's market research. Dale is a highly respected industry analyst with over 25 years of experience producing award-winning market research in technology trends, competitive analysis, forecasting, and supply-demand research. Welcome, Dale. Finally, CJ Muse is Senior Managing Director, Head of Global Semiconductor Research at Evercore ISI. He has been an institutional investor analyst covering semiconductors and semiconductor equipment for the past 11 years. And prior to joining Evercore ISI, Mr. Muse was Managing Director and Senior Analyst at Barclays Capital, where he followed the semiconductor and semiconductor equipment sectors. Welcome to you, CJ. Before we get to a roundtable discussion and Q&A, I'd like to go around and have each of you provide your analysis on the year that was in 2020. And then what we'll do is go around again and to get your thoughts on what each of you expects in 2021. Andrea Lati, why don't we go ahead and get started with you? The WSTS final 2021 numbers, 2020 numbers came out on Monday, and the market had grown year over year by 6.5%. Give us your analysis of the 2020 semiconductor market and how it shaped, how it played out.
Yes, 2020 actually was a pretty challenging year to forecast, and we pretty much hit our December forecast, December of 2019 forecast, which called for about 8% growth for the overall IC market. But of course, during the course of a year, we had to change the forecast many times because of the pandemic. So it was quite a wild ride. So this chart here shows the weekly IC sales growth on year-over-year basis. And as you can see in this chart, the recovery started in the second half of 2019. In the first quarter of 2020, the IC sales moved into positive territory. And the growth actually in the first half of last year was surprisingly strong given the state of the worldwide economy. And that, strong growth that we saw the IC was propelled in part by the work at home economy. We did see the momentum roll over in the third quarter, but then in the fourth quarter, we saw the growth start to accelerate again as component shortages strengthened IC prices. This chart here shows the weekly IC growth for the major IC segments. There was bifurcation throughout 2020 among the major segments. DRAM and NAND started the year very strong, but they were, the growth numbers were very impressive there because of a steep downturn the previous year. However, in the second half of the year, we did see the growth for both DRAM and NAND roll over. Logic segment went through a similar trend, though not as pronounced as that of memory. And analog and automotive went from bad to worse in the first half of 2020, but then they had a very strong rebound in the second half of the year. One more thing that in this chart here, because I cannot see because of the panel, if you look at the fourth quarter, actually, the growth actually began to accelerate for pretty much all of the major segments. And that actually was a very positive sign because it pretty much told us that the IC recovery is becoming more sustainable. This chart here shows the supply and demand state for the major semiconductor segments. And as you can see, conditions are looking very tight at the moment. DRAM, foundry, and OSATs are currently in a shortage state, while NAND, IDM, and analog are in a tight environment. IC inventories have been improving. The teal line here shows the total IC inventories. In December, they're running about 8% higher from a year ago. The metric that we look here closely is the inventory to billings ratio, which is a red line. Typically, when this ratio is above 1.4, it indicates excess inventories. Inventory to billings ratio last year trended up in the first 3 quarters, jumping even above the 1.4 level. However, in the fourth quarter, we did see the inventory to billing ratio come down. And part of it was because of the improvement in the IC demand, which led to improved IC sales that were basically growing faster than overall inventories. Chip price performance index is one of our most reliable leading indicator. It measures chip prices relative to performance and functionality. The CPPI is the blue line in this chart. And when the CPPI is falling faster than the Moore's law, which in this chart is represented by the green and the orange line, it basically indicates that there is excess supply in the market. When the pricing is flat or trending higher, it indicates tight market conditions. We saw some really big declines in 2018 in pricing that basically told us that 2019 was going to be a very rough year for the industry, and it was. Towards the second half of 2019, the CPPI began to recover, and that was one of the reasons why we're so positive about 2020. And if you look at within 2020, in the first half, the CPPI got this really big boost from the shortages that were related to the COVID-19. But in the second half of the year, especially in the second and third quarter, we did see the CPPI roll over. As of fourth quarter, the CPPI actually has been increasing quite a bit, partly because of those shortages that I mentioned earlier. And of course, for chip makers, this is very positive because it means very tight market conditions for the year ahead. So I'll stop here and let Dale give his view for the 2020.
Perfect. Dale, over to you. 2020, crazy ride or what?
Definitely a crazy ride. Let me try and share my screen here. Oops, hang on. Let's see, Andre, I'll need you to stop sharing your screen so I can share mine.
Oh, there you go.
There we go. Okay. Let me pull up my slides here. Give me 1 second. Come on. There we are. And we'll go to full screen mode, hopefully. There we are. Great. So yeah, 2020, crazy. The word I'd like to use is a whipsaw to describe how this year played out. And the way the dynamics shifted throughout the year really required all of the participants across the supply chain to be very agile or nimble in their response. Agile has become a very popular word in the industry. As an industry association, our goal is to support all of the participants in the electronics component supply chain. In fact, especially focused on the authorized channels, beginning with the manufacturers through to distributors and manufacturer reps. We work with all of those players to understand the dynamics and to support them in their efforts to support their clients. We did a number of surveys in 2020 to capture the environment that all of these players were experiencing throughout the United States. Our focus really is on the US and the Americas. And we started out doing some secondary research, you might say, in January as we saw the first impacts of the pandemic, and we had great concerns about the supply of components. That's the beginning of the whipsaw. But then as we move forward and we saw the spread of the virus around the world, we shifted and began doing biweekly and monthly surveys to try and assess what was taking place. And here you see the results in April of what were people experiencing in terms of the government mandates to quarantine and to follow new directives in management of businesses. And we see that concern already existed with a fair number of players saying serious to moderate concern about how it was impacting their operations at the beginning of April. By the end of April, concerns had grown dramatically. We see a 10% saying severe impact and over 25% a serious impact on their operations. Fortunately, things calmed down over time and how the impact is playing out. We saw a brief resurgence in the July timeframe in terms of concern, but never really on average got higher than moderate concern. And then we saw a significant drop off in concerns as we moved into September, with most people saying the impacts are only minimal. If we looked at different stages of the supply chain, we see that from the very beginning, on this chart, I should say, we had very detailed surveys. And what I've done is tried to capture a top level view of the data that we presented in this index. And in this index, 50 would represent moderate impact from the pandemic. Over up to 100 is a severe, 0 is none. So higher the figure, the more greater the concern. We see that from the very beginning, great concern about disruption in terms of loss of end market demand. That continually has been the greatest demand the players in the supply chain have expressed. But next to that, we see the concern of supply of electronics components themselves, and also the shipping and logistics disruptions. Those followed typically as the next greatest concerns. You see how it evolved over the year. No surprises. We're all familiar that by the time we were later summer, that a great deal of the concern had abated, resurged again in the August, early September timeframe, but very quickly abated again at the end of September, fortunately. And so a great improvement there as we move towards the fourth quarter of the year and the performance. If we look at the impact on the end markets, in this case, up is good. So a strong increase in demand due to the pandemic is above towards 100. A strong decrease is at 0, and no change is at 50. And again, not a surprise here. We see the medical equipment continually experiencing strong demand across the board. But we also noted the computers and data processing, actually a boost due to the pandemic, with the demand in data centers, the work at home environments, and then the telecom infrastructure as well. All the demands for broadband and for just bandwidth, I should say. And we saw, if you were working from home in the early days, you saw the impact on your environment. Over time that improved. Again, the automotive and industrial markets taking the biggest hits here in terms of how they were playing out in this marketplace. So one last view here that we can take a look at is, how is this impacting the broader electronics components market? Yes, we know that semiconductors wound up with 6.5% growth for the year, but it was a tougher year in other segments of the market. If we look at a worldwide basis, we only have Q4 through Q3 data. We're still finishing up capturing Q4 of 2020, which I think will result in these numbers improving a bit. But we saw the capacitors, resistors, inductors all saw declines, but fortunately on a worldwide basis, the decline was not as severe as what they experienced in 2019. However, the picture was different in the Americas. A tougher year for the passive component players in the Americas, while due to the share from memory in the Americas, a much higher performance, nearly 20% growth in the Americas. So with that, let me wrap up those comments and pass it off.
Thanks, Dale. Appreciate it. And I appreciate you focusing and doing those surveys throughout the year. I think maybe global economic recession in 2008, 2009, and maybe the dot-com bubble burst in 2000, 2001 are the only other major types of events, such as the pandemic, where we saw just a complete rethinking of where demand was and sort of having to sort of go back to the drawing board, if you will, to try to understand what's going on in the market in 2020. CJ News, how about, what's your thoughts? Again, more chaos in 2020. Is that how you characterize what went on?
I'd say yes and no. So thanks, Colin. Thanks for having me. And good morning, good afternoon, everyone. As I look back on 2020, likely to be remembered as an inflection point for the work from anywhere era. But for me, the year signals the recognition of the secular importance of semiconductors, driving the digitalization across nearly every industry vertical. Semis as the new oil, so to speak. Semi revenues, ex memory, have represented roughly 0.35% of US GDP over the last 5 years. We saw that jump 10% to 0.38 in 2020. And we expect this trend to continue, particularly when you reflect on the ubiquitousness of semis combined with emerging business models that can now afford the cost of leading edge silicon. If I look back to 2020, we came into the year looking for 10% growth. And really the important factor here is that we went through a correction in 2019. And if you look at the entry point into 2020, semis had already corrected 20% versus the 3Q 18 peak, which really set us up very well, despite obviously the COVID pandemic. As the dynamics became more clear, we cut our estimate to 4% growth in March, and then we went flat in April, and we kind of kept that there until things started to look better thereafter. But I think the important factor when you think about where we are sitting today, most industry participants that I talked to were thinking flat to down 10%, probably closer to the down 10%. And in a survey that we did with investors back on April 14th, 68% of the respondents said flat to down 10%. I can't say, back in April that we thought semis would actually grow 7%, like reported by the SIA, but flattish was better than feared. And clearly, the key here was, we already corrected going into a correction. If I move to the investment side, shares peaked out in February 20th. We then declined 34% over the next 4 weeks, and stocks bottomed on March 18th. Importantly, though, again, through a survey of investors, 69% expected semis to outperform the broader market, and 48% were sheltering in place in the home compute cloud stocks. So think NVIDIA, Intel, AMD, Inphi, and then 23% were in long lead time semi equipment. If we fast forward to April earnings, very important catalyst that highlighted to us that things were not as bad as feared. Calendar 20 EPS revisions for all semi companies were only cut by 1.4%. So supply and demand shocks combined barely moved the needle on fundamentals. TSMC at that point guided revenues flat to only down slightly. That provided hope. And then China recovery in March, really fostered optimism among semi players that the recovery could actually be fairly good. But to be clear, we were all debating at the time, is this going to be a V, a U, a fish hook, an L, a Nike swoosh type recovery? So clearly a lot of uncertainty. I'd say the one place of real overreaction was auto production, where we saw production cuts 30% in March and then a real super shutdown, which came in April. And we're obviously facing the consequences of that today, which then bridged us to the next round of volatility, where we had the Huawei TSMC embargo announced on May 15th. The good news here is that most companies had de-risked Huawei. The bad news, negative implications for TSMC, semi equipment and EDA. Semi stocks at that time continued to grind higher. We did a survey in July. Interestingly, 32% of investors favored broad-based analog. So in that time, investors were getting geared up for a broad-based cyclical recovery, and that was their favorite place. Also, very interestingly, only 14% of investors favored the RF names. So clearly, there was a divergence between the vision for broad-based recovery and not wanting exposure to the end consumer. And that actually, proved to be a bad call, given the performance we saw with handset stocks, which really started in the June timeframe. And then just fast forwarding to September, clearly a better than feared year was fairly well understood, but then we had the TSMC Huawei embargo for September 15th, which led to fears of who would absorb that excess capacity. And lo and behold, Apple, Oppo, Vivo, Xiaomi, Samsung, as well as all the great things we're seeing in high performance compute, filled that void and has led to the current environment we're in today, which is, a current commodity inflationary world, which we're seeing across the entire semiconductor supply chain, which I'll discuss as think about 21 outlook, which will come a little bit later. So with that, let me turn it back to you, Fallon.
Appreciate it, CJ. Thank you very much. Yes, we'll definitely want to talk about the whole paradigm shifts that we may be seeing long term in the Q&A that you touched upon at the beginning. That's very interesting indeed. And certainly the whole idea of just the uncertainty that we experienced walking through each quarter, even month to month, looking at the data. So much uncertainty, especially in the first half, was very characteristic of this year. Let's go ahead now and turn back and have you folks take a look at what we have in store for 2021. We can start again with you, Andrea, and go with Dale, and then again with CJ. But Andrea, what are your thoughts? We've just gotten through a pretty tumultuous year in 2020. Do you see sort of the volatility and sort of more certainty, clarity in the market for 2021, or do you see more of the same?
I think that it's still going to be volatile, but probably not as volatile as last year. I think there are several drivers at play for semiconductors this year. One of the main one, of course, is the ongoing economic recovery. There is a lot of pent-up demand and a lot of liquidity in the market. One interesting metric to see is the money supply, which is here on the right chart, the blue line. And it's up an astounding 60% on year-over-year basis, which is far greater than the levels that we saw during the Great Recession. Of course, all this money that is in the economy should help the economic recovery and also be a tailwind for the semiconductor market this year. Another important driver, I believe, that is going to be the big expansion that we're seeing in the cloud that's boosting server demand. Hyperscale CapEx spending hit an all-time high last year, surpassing the 2018 peak by quite a significant margin. Amazon was the biggest spender last year, driving much of the growth there, which is not surprising as many people turn to online shopping, but this is also because of the increased adoption of the public cloud. Speaking of the public cloud, the big investment that we're seeing there are being supported by very strong financial performance by the cloud providers. CSPs are generating very strong sales and profits. So the spending levels that we're seeing there, even though they are very big, they are clearly sustainable. And 5G proliferation will be another big driver for semiconductors this year and in the coming years. 5G phones hit about 200 million units last year. This year, they are expected to increase over 500 million units. So this increase in mix that we're seeing there will drive a significant growth in silicon content. And if you look at the silicon content in a 5G phone compared to a 4G, is about 50% higher. And the increase that we're seeing there are across the board. We're seeing more silicon in logic components, DRAM, NAND, and optoelectronics. Now, if we look at the overall semiconductor market, this year we're projecting a 12% increase. Memory will lead the way with both DRAM and NAND growing by double digits as the recovery there becomes more stable and gains more traction. The recovery that we're seeing in automotive industry and also the broad economy will boost growth in analog, discrete, and optoelectronics. And this year we expect growth to be in the low double digits there. And the 5G ramp, the cloud expansion, will extend the gains in the logic market with sales growing about 9% in 2021. And another part that I want to touch up, because I'm sure it's going to come up later on, is the CapEx. Basically, if the equipment, if the chip makers are spending enough to keep up with increasing demand. Last year, CapEx increased 12%, which was quite a remarkable number. This year, we're projecting a 16% increase in CapEx. And as you can see, Samsung spent, a lot of money last year. TSMC is expected to spend also a lot of money this year to basically capture the growth that they expect from the secular trends that are happening in the semiconductor industry. And if we look at the CapEx, actually, it's quite interesting because the top companies accounted for about 74% of spending last year. And their spending levels actually have been fairly stable in the last few years. They've been hovering in the mid-70s, so they continue to spend. And another interesting thing about the list here is that in the top 10 spenders, the last 4 companies are all Chinese manufacturers. These companies accounted for about 13% of spending last year, which was up 5 percentage points from the previous year. So in summary, I would say that the semiconductor recovery is on track despite the ongoing uncertainty from the pandemic and also the US-China tech war. As for the drivers, I think that the key drivers this year will be the build out of the IT infrastructure, the 5-nanometer demand ramp, also the 5G proliferation, memory capacity build out that we're seeing, and also the continuing economic recovery. As for potential disruptors, I think the biggest one is really the one from the fallout from the US-China decoupling. And also another one is the potential of made in China capacity glut. I mean, we know that China has been expanding, their capacity, especially in memory. So it remains to be seen if that's gonna shake the balance or this stability that we've been seeing in the memory market this couple of last years. So I'll wrap up this part now and let Dale give his views.
Perfect. Appreciate that, Andrea. Why don't we go ahead and turn over to you, Dale? 2021. What's your assessment? What's your forecast?
Great. Let's get into presentation mode here. Come on. If I can get it to go to presentation mode.
And while you're doing
There
that, I will just say while you're. Well, oh, looks like you're ready. Okay, I'll mention it later. But go ahead, Dale.
Okay, good. So the data that's published by SIA is of great value. And I appreciate the chance that we have to see that data and the benefits that our industry receive from that data. This is just a quick snapshot of some top line growth data, the annual growth, the annualized growth, and the quarter over quarter growth profile. We saw that we started a recovery and started the beginning of our latest, the 11th major cycle in the semiconductor industry by my count in September of 2019. And interestingly enough, even with all the challenges we went through, the upward trend in the annualized growth continued upward. And in fact, it broke positive in August of 2020. And so that's a very interesting development. Throughout the course of a very challenging year, the annualized growth went up. And yes, the quarter over quarter, the 312 took a bit of a pause during the year, but once again, it has turned up as well as we came to the end of the year. So we see this great environment set up with accelerating growth as we come into 2021. Now, another survey that we do is we reach out to our members and we ask for their expectations of growth in the markets in the coming month and also in the coming quarter. This shows a monthly view showing what expectations were going back through the past year and looking forward into this year. And we see that after the pause we experienced in December, across the board in all the major component types, we see a very nice profile of increasing expectations for growth in January and looking forward into February. Typically, semiconductors have sat right at the top of this profile. Electromechanicals had a little bit of a tougher time, but in general, the major component categories have moved in unison in terms of their expectations in the marketplace. Now, another factor you can look at in terms of demand and supply-demand balance are the average lead times. And this shows data from the Americas market in terms of lead times. And the key points that I think you have to pay attention to is the dramatic jump in lead times for controllers and processors, reaching the highest level we've seen going back even to 2015. We also see an upward turn in discretes, not as high as it was in the past, but an upward turn in discretes, and then buried down a little farther in that spaghetti, you'll also see an upward turn in analog and in logic components. So we see upward turns, and so we're seeing a tighter situation, as Andrea talked about, in terms of the supply chain and availability of components. That's going to apply pressure, and I would note, I'll come back to this, the demand for discrete components and the controllers, I think you see some of that showing up, and we'll come back to the discussion in the automotive space that's been in the news. Looking at these 11 cycles, it's interesting to look at how they began. This shows the growth rate from the bottom of a cycle beginning the recovery period. And what I've done is I've normalized all these cycles, started them all at 0%. And what we see is that in the current cycle, with the exception of a couple of 3 cycles, we're at the upper end in terms of how we've recovered in this current recovery period that we began in November, beginning out at minus 12.7% growth. We've now recovered quite nicely. We're actually 20% up roughly from where we were at the bottom. So very nice beginning to the cycle as we move forward into 2021. Now, Andrea mentioned the alignment between the electronics and semiconductor industry and the overall GDP. This chart shows data going back to 1990. We show the GDP on the right-hand side, the growth in GDP, and the growth in electronics equipment production and in semiconductor sales on the left-hand side. And we see that beginning in the mid-1990s, we started to see an alignment between economic patterns, the turning points at least, and the electronics and semiconductor industry. And in fact, as I show in these dashed marks, the semiconductor industry becoming much more responsive to our market indicators, becoming almost a leading indicator for the overall economy. And so we see that this pattern, this alignment continues moving forward. And so as we look forward, the current global GDP could create a drag on the growth. So we need a stable economic environment as we move forward. Maybe not a booming growth, but we at least need stability. But I believe technology and market forces are aligning to support growth going into 2021. Now, I won't go into all the details of this chart. We see that there are many forecast scenarios for the economy and the economic growth. But one that really captured my attention was an upside scenario published by the Conference Board that they call the swoosh scenario, calling to mind the Nike swoosh. And I firmly believe that in our industry, we have an opportunity for the swoosh scenario and growth. I think we're seeing the early stages of growth, but I actually believe there's opportunities for growth accelerators moving into 2021. We do have concerns about the economy, the global economy. These are my major concerns in terms of the impacts. The world trade, we see, of course, that has changed dramatically. And I believe electronics and semiconductors were one of the biggest beneficiaries of this free trade environment. We saw that from 2000 to 2017, trade went up from 4.8 trillion in manufactured goods to $12.2 trillion. Small businesses are critical. We see a large number of small businesses impacted by this, and small businesses are a key backbone to the manufacturing sector. Nearly 250,000 companies in this sector, and 3/4 of the firms in the manufacturing sector have fewer than 20 employees. Concerns about the energy shock, manufacturing concerned roughly 1/3 of all of the energy produced in the United States. So if we see increasing energy prices, that is a challenge for our manufacturing sector. And then without going into detail, concerns over the societal political turmoil. Looking long run, this is showing the revenues, the annualized revenues for semiconductors published by WSTS. We've seen 3 general patterns of growth in the early stages, typically growth over 30% if you looked at the long term on an annual basis. And through the 1990s, up through the mid-1990s, the growth went into the mid-teens, 15 to 17%. But as I show on this green line, it's quite interesting. What we see here is that beginning around 2005, while yes, it went up, it went down, we've seen a long-term average growth of about 5.5%. We move above and below that line, but that's been the long-term trend that we've been in. If you extrapolate that trend, that means that we could reach $750 billion in semiconductor revenues by 2030 and $1 trillion by 2036. And so I'm not saying we will stay on that line, but if that trend were to hold up, now typically the more mature an industry becomes, the lower the growth rates trend, but still we see a long-term trend that supports very nice upward growth in our industry. Then finally, touching on some of the key drivers here, I do believe the technology and market drivers will build momentum through the year. We need the economic stability, the adoption of new technologies across the board. 5G and other areas will drive expanding design opportunities. We'll see the redesign of many platforms and opportunities for new component technologies to make a mark here. But we can't overlook the legacy manufacturing capacity, and we'll come back to that discussing automotive, especially with the 200 millimeter capacity. A number of key positives looking forward with medical, data centers, infrastructure, et cetera, but challenges as well, including the global trade and challenge in managing the supply chain and inventory. But to wrap up, I come back to my main point, which is a triad of driving technologies in this space, which is IoT, 5G, and the cloud. We all have our long list of various technologies, but I believe these form the foundation. This is my triumvirate of technologies that all others depend on. And I think they will drive a really significant wave of growth that could take us beyond the typical 4-year cycle. I think that we could have a super cycle almost as we move forward. So with that, I will wrap up my comments and turn it over to CJ.
Appreciate it, Dale. Thank you very much. Wow. I'll just note 750 billion and by 2030 and 1 trillion by 2036. You've heard it here from Dale Ford. That sounds like great long-term growth if you were to ask me. So yeah, let's quickly move over to you, CJ. What are you thinking for 2021? And just to let folks know, CJ is not using slides. So if you have a question about where his slides are, he's not using them, he's just talking. So go ahead, CJ.
Yeah, thanks, Colin, and apologies for no slides. Busy earnings season. So we ended 2020 talking about a commodity inflationary environment. Obviously, we're seeing increased foundry pricing, higher OSAT pricing, pretty much across the board. And that's even exacerbated by lean inventories throughout the entire channel. I think one interesting area to think about here that has really set us up for this kind of challenge is PCs, right? And in most people's view, PCs are a secular loser, but the work from home and anywhere trend led PCs to grow 13% in 2020. And I would dare say that PCs probably, typically 25% of worldwide semi demand probably grew to 30% in 2020. And with PCs expected flat in 2021, the industry was simply not prepared for this situation, which means secular and cyclical drivers on top of ongoing PC strength likely means the current supply constraint environment will be with us for all of 2021, which brings us to our 2021 outlook piece, which we published in December. The title was Born to Run Again as the cycle emerges in the cycle. So our view with semis benefiting from being the key component for both the new and old economy. And as we look for both secular and cyclical recovery, we're modeling total semiconductor revenues growing 15% in calendar 21, and that is 12% ex memory, 30% growth in DRAM, and 12% growth in NAND. Auto production is expected to grow 14% here in 21 with increased content gains. That means 20% growth for semis. Industrial is only beginning to see signs of a recovery after 2 years of depressed spending on trade war concerns and obviously COVID restrictions. This will be the next meaningful area of it for inflection, led by factory automation. Then add in continued strength in data center spend, 5G rollout supported upside across comms infrastructure, smartphone, and IoT. And the secular growth trends across semi-land will be in full swing throughout 2021. And importantly, this is our base case scenario. We're not baking in the benefit from potential US government stimulus. Semis have a 0.96 correlation with GDP. So as GDP moves higher, so will semi revenues. Our policy team at Evercore suggests a $2 trillion stimulus could add as much as 400 bips to US GDP. So that's something to think about, which could finally drive a cycle in this cycle, meaning, at least a 6 to 8 quarter upturn, if not longer. And very importantly, I remind you, December 2020 quarterly semi revenues run rate is still 6% below the prior Q3 18 peak. So, our view simply is the party's just getting started. Moreover, supply constraints should act as a regulator to support a stronger for longer environment, which brings us actually to a very interesting point. The semi cycle over the last decade has been a bit muted. Supply additions outside of memory were limited. There was also less geopolitical tension, and a pandemic was not on our radar. This is all obviously changing, which suggests room for inventory builds downstream, potential for higher prices, and then eventually likely more cyclical volatility going forward. So look for semis to continue to lead the market higher in 2021. And then bigger picture, as we started, 38 bips of GDP, which we think, is small, particularly when you think about semiconductors as the key enabler to a data-driven economy. So whether data creation, transmission, storage, or analytics, and with data come new business models that can support the rising costs associated with leading edge silicon. So think less of $1,000 Apple smartphone conundrum, but think more the value of high-speed data capture and analytics for an enterprise player like Google, which will then only put more pressure on bringing compute to the edge. So a nice long-term structural growth outlook for the semi industry. So the takeaway, 2021 is going to be a great year, and we should see growth again in 2022, supported by a supply-constrained 2021. Longer term, semis are a GDP plus grower, but the challenges faced in 2021 will likely bring on more supply, lead to more inventory buffer downstream, which means likely more cyclicality ahead as well for the industry. And I'll stop there.
Great, thank you, CJ. Just to, in terms of 2021, what the WSTS has forecasted, and this was back in December of 2020, they had forecasted 8.4% year-over-year growth in 2021. Obviously, we've seen a lot of growth acceleration in Q4, so I'm anticipating perhaps when WSTS participants get back again in the spring, that they may have a reforecasted 2021. But let's go ahead and turn over to Q&A now for the balance of the hour. I'll remind participants, if you want to submit a question, please do so in the Q&A button, and we'll look through those and see what we can address. I'd like to just start off with a couple questions to sort of drill down a bit in what you folks have already mentioned. One regarding the 2020. The impact of the shape of the pandemic on the semiconductor market long term, what the legacy may be. I think, CJ, you had mentioned, sort of a whole new way of, a new paradigm, right, of different growth drivers shifting. I think it was the first time, at least that I've been covering the market, where we saw some subsegments actually decrease while others moved in a different direction. Can you maybe start with you, CJ? What do you think there may be the long-term legacy on how the market is structured in terms of growth drivers? Are there going to be different growth drivers, moving forward because of the pandemic?
Yeah, sure. No, it's a great question. And, I had a conversation with the CEO of a semiconductor company 2 days ago. And, he said, his customer, an auto customer, is saying, why the hell do I have to slow down my production for a $6 or $8 chip? And so I think that's really going to be the big change statement here, where we were working as if one global supply chain. We were happy and content with working from a just-in-time delivery mechanism, and now I think that's going to change. I think we're going to have buffer inventory at OEMs, at key suppliers, at disti suppliers, and so I think that is going to have a twofold impact. One, it's going to be positive for the near-term trends, and I dare say beyond 2021. But then oppositely, I think that's going to create room for a lot more volatility in what the cycle looks like, right? But that would be probably the biggest change statement that I think COVID or the dislocation that we saw in 2020 will have. I think that businesses are going to be willing to not be as lean, spend more money to protect their core competencies.
Got you. Andre or Dale, you want to jump in? Thoughts on this?
Well, I think at the high level, the COVID-19 really showed how important technology has become to the world economy. I mean, we're really depending on that, and we got through that because of technology. And I think that it's definitely accelerated the digital transformation of the economy, and also it's making for a more sustained demand for semiconductors. And I think what we're probably seeing, in the coming years is probably a shift from this consumer-driven demand to this commercial investment, especially in areas like IoT, 5G, AI, cloud, that I think will likely reshape many of the industries in the economy, like transportation, healthcare, energy, agriculture. So I do think that we are going to move into a more sort of let's call it commercial, driven demand in the coming years.
Gotcha. Dale?
Maybe I can add on to that. Certainly the profile of our economy is going to change. The mix of what we do in terms of travel versus working remotely, working in the office, all of those things are going to change. And I believe that's going to also change the purchase pattern for electronics and the components that go with them. Certainly, again, the technologies are going to change it. But one key thing I think that is important to address in terms of the impact going forward from the pandemic is the supply chain itself. CJ mentioned briefly more buffer stocks coming into play. And this has been addressed by major procurement managers in the industry. And they've talked about, we go through these swings in the industry of going to more just-in-time inventory concepts, to more buffered inventory after we get comfortable. And there are now tools being developed that I think will be a significant benefit to the industry. Still very pricey, but I think we're looking at new tools where people are now applying. You see consortiums coming together where they're applying artificial intelligence, AI technology, to develop solutions for supply chain managers where you can actually do more scenario development, more intelligent scenario development on your supply chain, and you can anticipate better how different factors can impact your supply chain. And moving from more of a what is the situation now, key performance indicator, to what they call, instead of a KPI, a KPP, a key performance predictor. And so our ability using AI technologies and working with various scenarios, I believe we'll find better solutions to help us deal with these black swan events moving into the future for our supply chain.
Appreciate it. Thanks, guys. I think a couple things I would just mention. Dale, I think I want to underscore the point that you made about how the economy is now so electronic that just major shifts in how we as a world operate will affect sort of the way semiconductors are demand changes, because we're in everything. We're in consumer electronics, we're in cars, obviously we're in industrial activities. So yeah, I think that's certainly something to underscore in terms of the impact on the semiconductor industry with changes in how we operate as a society. And also to just let folks know this idea of the supply chain and buffering the supply chain. SIA is working on a study actually looking at the supply chain and the importance of the global supply chain for the semiconductor industry with the Boston Consulting Group, which should be coming out probably in a month or so. So let's talk about the auto chip supply shortage, because I think that's something that I think we've heard a lot about, and wanted to be sure that you guys have a sort of an ability to sort of explain a little bit more what's going on there. Dale, you had mentioned early at the beginning, the whole COVID crisis needed agile. I think the words were agile and nimble types of responses, right, to this pandemic. My question is though, I think everything was sort of shaken about. But we are dealing, and folks may not know this, we are dealing with an industry that has sort of constants in terms of how long it takes to produce, for example, a chip, right? And so there are sort of constraints in them in that regard. Perhaps you could talk a little bit about that and sort of how this has played out and how you think it may resolve itself.
Certainly. So I just published a report this week about the automotive crisis and chip demand. And this has moved around the world. It first began with European economic ministers reaching out to Taiwanese economic minister. Now the US has gotten involved with senators, et cetera, because we're seeing automotive lines being shut down. Certainly, automotive demand came back much faster, much more strong than had been anticipated. And hence that the automotive suppliers were caught by surprise, the automotive manufacturers. And so as they tried to move into and place orders for this greater than expected demand, they found that the supply for the type of manufacturers of components that they need was taken. And what we're talking specifically is not the bleeding edge, lowest process geometry, highest wafer size 300 millimeter wafers. For the economies of the types of products they're purchasing, they need products that are built on the 200 millimeter wafers. And they need to be able to source a lot of their components there for the right pricing and the right costs. And what we see is we haven't had investment into the 200 millimeter for a long time. Companies are finding it very profitable to run products on those lines, but the investments have been more in the bleeding edge, leading edge technologies. And so we don't see expanding capacity. You saw some of it in China, but of course we have the challenge with China now. And so with the relatively lower volumes in automotive, it's hard for them to get priority in trying to compete at, say, 100 million unit automotive market against a billion unit plus smartphone market. And this is the situation where, for lack of a low cost component, all of the other things are held up. In this case, a low cost semiconductor can hold up the production of an entire automobile. And so the ability of the industry to respond in the near term is going to be challenged. TSMC, UMC, and others are working to take steps to prioritize, but they can't do that by sacrificing their other customers. So they are trying to take measures, but it's not going to be solved in the near term. The senators want the May to put out a letter, said they want the US to engage and use the National Defense Act in order to make investments to try and get us past this. But as everybody knows in the semiconductor industry, you don't throw up a fab overnight. It's not like what you might have been able to do with the record pace creating a new vaccine that we did in this past year. It simply takes time, and the incentive profiles, the return on investments to produce the kinds of wafers, the kinds of products that the automotive industry needs. There's a lot of challenging questions there. And so I don't believe it'll be a near-term solution.
Andrea, CJ, thoughts on this?
I'm pretty much along the same lines as Dale, actually. Nothing really to add.
Okay. Gotcha.
Yeah, the only thing I would add, and I think, Dale hit it spot on, is that, while semiconductor contracts with auto manufacturers are long lasting, typically, as many as 5-10 years, you don't have a guaranteed, commitment to demand, right? So it's based on each SKU, and many of the semiconductors that go into automobiles are built specifically, for each of the automakers as well as each of the different vehicles. So when the OEMs cut the utilization, it's only natural that the chip makers are going to want to cut as well. So I think that played a role as well in why things are so challenged right now.
Excellent. All right, why don't we go ahead? I want to move ask a quick question about from the market to the industry and how the industry is going to supply and operate to supply the market. Andrea, you had mentioned CapEx trends in your presentation. Can you dig a little deeper, give us a little more sort of insight on what you're seeing in terms of CapEx trends and how sort of the buildup in terms of capacity looks over the next couple of years?
Yeah, and it's interesting because if you look at spending, actually, the spending levels there have been quite healthy. And if you look at actually equipment industry has been growing than the semiconductor industry for maybe now 5-6 years. I need to look at the data, but at least 6 years. So, chip makers are clearly spending more than what they are generating in revenue. Now, part of it is also China, right? Because there's been a big spend in China, and they're still in the early phases there. However, at the leading edge, companies are investing big, TSMC, Samsung, because they see all these secular trends and they want to make sure that they capture the growth from these secular trends. And if you look at spending levels, they actually are way above their historical norms, mainly because they anticipate greater demand ahead. And of course, spending is always sort of a leading indicator because you need to build the capacity way before the demand is there essentially. So it's always sort of a forward looking. So it is there. Again, I think that this year we're probably looking at pretty tight market conditions overall. And we're also need to pay attention and see if there's going to be double ordering because, when things get very tight, there is panic. And but however, I think this year, I think we're looking pretty good. 2021 also looks good, but I think once we roll into 2022, we have to pretty much look at the down cycle and see what's happening there, because I think at that point, there's probably going to be enough capacity in place. And then depending what happens also at the macro level, we need to see, how the cycle turns around. But I think that in the next 2 years, things look pretty good, and there is capacity coming online because there is spending levels are higher, and that should drive more capacity increases.
Okay, yeah, and certainly long-term growth seems very well in place. Per Dale's sort of a forecast of 750 to perhaps 1 trillion. But I only mentioned. I think I actually don't want to say that in jest, because I think one thing to ask about ask is about the longer term, the long-term growth, right? And I think you folks alluded to it in your presentation, but it's always important to understand, looking way out, where, is the health of the industry strong? Are there long-term growth drivers in place to ensure that while we may have, notoriously, cyclicality in the industry in the short term over the next few years, that long-term growth is in place. Anyone have any thoughts on, sort of where that will come from and how that looks going forward?
Maybe just to comment on that,
Mm-hmm.
The long term, I would say the future is bright. I'm an optimist in that sense based on my experience in the industry. And trying to anticipate what will drive it is very difficult. How many people anticipated the smartphone? How many people anticipated the various major products that have really reshaped our world if you look back in time? The one thing that I have noted is that the advances in technology, the advances in the products that are being brought to market, we're improving at what I see as an exponential pace. So the markets won't fail in the future for lack of innovation and for lack of technology. If anything undermines it, I think it could be the overall economy. And there are visionaries out there. If you look at a video that's out there by Elon Musk right now, the visionaries are out there, and they're people who can turn that vision into reality. And so right now we talk with excitement about, autonomous vehicles, electric vehicles, things of that nature, right? But there's more coming. And we're just looking now at the commercialization of space, for example. And so there are exciting opportunities out there, and I see exponential growth in terms of the underlying forces that can drive it.
Perfect.
I would add a couple more points to that in terms of, I think that, you're seeing economic models that evolve that are more enterprise commercial driven versus consumer. And I think that's a really important change statement. And a lot of that really has to do with the data-driven economy. So, data creation, again, transmission, storage, analytics, these are creating, new evolving business models that, don't, have that $1,000 iPhone problem, which is how many consumers can afford to pay that. Whereas the economic model for enterprises based on this data, can support a much greater deal spend on leading edge silicon, lagging edge silicon. So that would be one. And then two, I'd say pricing power. I could see a world here where semiconductor pricing ASPs start to move higher. So, I think the thought process is, semis tracking nominal GDP globally, so call it 4 or 5%. And if you add the benefit from these two other drivers, I think you could actually start thinking about, 7, 8, 9% over time. And so that would be, bull case in my view.
Gotcha. We're at the top of the hour. We have one more minute, and I do have one quick question because, if we learned anything from 2020 is that we know we don't know what to expect, and sometimes it can be a very, I think you used the word, Dale, a black swan, right? A black swan type of negative event that just kind of pops out of nowhere. Looking long term, maybe not in 2020, but we know eventually some year going down the line, we're going to come up with something like this again, right? Whether it's .com bubble or global economic recession, or as we witnessed last year, a pandemic, right? What would you, if you had to point to something that may not happen, low risk of happening, but high risk of being disruptive, some event or something that you could point to that may happen sometime in the future that could potentially be as disruptive as what we've experienced in 2020 in terms of the semiconductor market? Anyone want to start off? Andrea, any thoughts?
I think for me, it's really more the geopolitical risks, especially in Taiwan area. I mean, to me, that's really a hot spot and something that have to be watched carefully. But it's hard to really know what will that major disruption be. I mean, but it remains to be seen. But if I had to pick one, I think geopolitically, I think things can get pretty ugly pretty quickly, actually.
All right. Dale, CJ, how about you guys?
I'll let CJ go.
Yeah, I was going to take the opposite side, so positive, not a negative, but pricing power. It's not something we normally think about in semi-land, but rising pricing could happen as early as 2021, and not just on a near-term basis, but longer term. That would be something I'd point to.
All right, Dale, it looks like you have the last word.
All right. If I were to look at a concern about a future crisis, it comes down to the potential balkanization, you might say, of technology and the world economy. I saw one question about, how is the current administration, the Biden administration, going to engage with China? There's an interesting term that's come up by a group that's led by Eric Schmidt and a leading group of people from the technology industry. They're talking about the need for the U.S. to pursue a policy of bifurcation with China. Now, they don't describe in detail what bifurcation looks like, but I am concerned as countries, as various areas pursue more of their self-interest, we could see more of a balkanization in terms of the internet, in terms of supply chains, those types of factors. It's that's more translating what Andrea was saying in terms of geopolitical concerns. That would be my greatest concern in terms of a future widespread impact event, the balkanization of the industry and the economies.
Well, especially with the semiconductor industry so globally reliant on global supply chains, especially. Well, yes. We have gone over by a couple of minutes, so I appreciate you spending a little extra time with us. But I want to say thank you for joining all the attendees. We have questions. Sorry, we weren't able to get to all of them, but I will we'll distribute them to the panelists, and if they want to be able to try to respond to them offline, they can do so. But I especially want to thank Andrea Latti, Dale Ford, and CJ Muse for spending the hour with us. And this has been very, very insightful. And we look forward to seeing how 2020 plays out. And maybe we can revisit again this time next year.
Thank you.
All right.
Thank you.
Take care.